Hello, everyone, and very pleased to be back here with Paul Kiker of Kiker Wealth Management. Paul, good to see you, and glad to see you've gotten over your cold, more
Yes.
or less.
Good to see you too, Chris. I've got a little bit of a itch left over, but I'm back to full energy again, which is really nice.
All right, well, just go ahead and cough whenever you need to. Um, so a lot has happened since last week, and I don't know if you saw, but I put out a piece recently that basically said, listen, I don't know exactly what's happening, but I do know for a fact that central banks have preferred buyer programs at the Chicago Mercantile Exchange, which is where the highly leveraged derivative products such as futures, options, things like that are traded. And I just asked the open-ended question, which is like, can anybody give me a compelling reason or any legitimate reason why a foreign central bank would get a preferred buyer discount trading natural gas contracts in the US, full-sized agricultural contracts of any kind, silver, things like that, equities. Now, we know that Bank of Japan is busy monkeying around in their equity markets to the point that in many cases they are the market, like they own
Yes.
majority positions. Like the Bank of Japan ought to be sitting on the boards of a lot of Japanese companies by shareholder rights laws at this point in time. But so we've seen at the time of the taping of this over just the past month or so, this rip roaring rally magically out of nowhere shortly after the Middle East, turbulence started, stocks and bonds just ripping higher. I don't just mean ripping higher. Let me just share this real quick. Um, let's go ahead and do this. This is the German DAX, DAX. This is the German stock market. You can see this big green thing that you could draw a straight line on here. Woo! That is a ripping rally. And by the way, it was fading and in real danger here for good reason because the German economy is tanking. They're
Yes.
losing their most productive in industries, right? Energy intensive industries, steel, glass, cement, all leaving for good reason, right? So,
Yes.
and this isn't just a rip and rally here. Let me pull this out to a monthly view because this is just this is a daily view, but that takes us from the say October 30th through to current, which is December, what do we got today? 7th.
Hmm.
Um Now let's go on a monthly. That, Paul, is a brand new all-time high for German
Yes.
stocks against a backdrop of deindustrialization, economic weakening, and all kinds of other factors. How do you begin to make sense of that?
That doesn't make sense to me. I've never known any investors, any textbook on investing that says, hey, buy with absolute panic and as much leverage as you can get, because that's what it takes to push markets to that level of high when economic numbers are deteriorating. It's one thing when you reach a bottom, right? You have a panic sellout. Market bottoms tend to be an event. That was not an event back in November. That was sparked by what seems to be this, like you've been pointing out, this global synchronized rally that takes place, and for whatever reason it's driven the DAX to new highs, and that just doesn't make sense. It's like an upside down world.
Yeah, let's look at this in the context of that global synchronized thing again. So I'm gonna have to move this over just a tiny bit, but this is all the markets here. So the
Mhm.
Dow Jones, S&P 500, NASDAQ, the DAX here, you can see they all have this sort of same sort of brontosaurus formation. The Nikkei participated, but it started to weaken a bit here.
Mm-hmm.
Euro stocks almost identical there. No surprise. Euro stocks 50 and the DAX, similar markets. But they've come in the context, Paul, of something very interesting, which is this is the VIX, the volatility index, the VIX, which nominally is supposed to track volatility, but it doesn't really, because
Yeah.
volatility can go both ways, right? You could be volatile higher, volatile lower. Volatility is just a deviation from current, right? It's how much are we moving? Are we moving 6% a move, or are we moving 0.6% a move? But
Correct.
in truth, what the VIX measures now is that when it goes down, stocks go up,
Mm-hmm.
and when it goes up, stocks go down. So it's sort of an inverse stock market. This got so crushed, so crushed. The VIX is so crushed, Paul, that buying in options are priced off of that volatility. If you wanted to buy a put on the S&P last week, It was the cheapest
Mhm.
it's ever been, ever,
Ever,
in my
ever.
entire lifetime, ever. You could buy
And there's
protection. Like investors are so certain after that rip roaring rally. They're so certain, Paul, that they're saying the stock market has never been safer. It's never been less likely to go down in anybody's lifetime.
right, right, which just doesn't make sense with what's taking place. You've still got conflict taking place in the Middle East. You've still got conflict in Ukraine. But it boils down to the elephant in the room. It seems the speculation is we missed on the CPI numbers that started the move in November. Then you have massive amount of corporate buybacks, and the belief is that the Federal Reserve is going to. I mean, really, the only bullish argument that I can come back to and looking at all the numbers is the fact that yes, we have some disinflation here in the short run. Inflation is cooling off a little bit, but you have to assume that if we do have some deflation, that it's not going to impact corporate profits and that earnings are going to hold up. But it boils down to the fact that there's the belief, and rightfully so, the Federal Reserve and the central banks of the world have convinced investors since the crisis in 2008 that they have a hand heavy enough to cause us to have a Goldilocks scenario no matter what. So, I don't understand the severe level of betting that the Federal Reserve's infallible and they're not going to have any missteps going forward. But that seems to
Well,
be the
yeah.
only argument that I can discover that causes the market to panic buy like this.
We've all been in that store. You walk in, there's a sign, says you break it, you buy it. You know, I think the central banks have broken the markets. I
Do
don't
too.
think they are efficient distributors of capital. I don't believe that they are future discounting machines. Like I taught when I went to business school, we had to take efficient market hypothesis. You go run through all the numbers, right? And they tell you, that basically that like it or hate it, whatever you want. But capital markets are efficient discounting machines, meaning millions of individual people have a collective intelligence that's beyond any one person's intelligence. You got to respect that, you know?
Mm-hmm. That's true.
But I don't think we're there anymore. I think we're in some other landscape where they probably for the best of intentions, the central bank started to intervene a little, and then a little more, and then a little
Mm-hmm.
more, and then one day you wake up and you discover that the Japanese central bank, is the bond market, and to a large measure is the stock market now.
Mm-hmm.
Um, so it's just a different landscape, which I think necessitates a different approach to
Mm-hmm.
figuring out how you're going to participate, because that is the game. What do they say? You know, hate the game, not the player, or whatever the
Right.
you know.
Hate the game, not the player, and play by the rules. You got to play the cards you're dealt, especially
Mm-hmm.
when you're not in a position to change the deck. So, but what's interesting to me is you've got the VIX. These seems to be mechanisms that these hedge funds, CTA hedge funds, which are basically futures traders, not the commodity trading version of that are big momentum buyers, and everybody is basically following those. I do pay attention when we're looking to allocate capital, whether it's more likely they're going to be massive buyers or they're going to be massive sellers. So then you've got these products coming out that allow you to bet against the VIX. I mean, the reality is you still have a massive number of unrealized losses on the banking system. You've got some liquidities continuing to drain from the system. I don't know where the source is, but there's approximately $7 trillion of government securities that has to be refinanced in the next 12 months. But yet you've got the VIX, which we're told the market is a forward-looking 6 months from now where things are, that is basically predicting there is no risk on the horizon whatsoever. No risk on the horizon.
Mm-hmm.
And, you know, I don't understand that. That's what it's pricing in. Thank goodness we're not just stubbornly betting against that at this point. But it does make sense to position your portfolios when you have all-time lows in the cost of insuring your portfolio to at least put some hedges on there and have your exit points ready, because if the VIX is wrong and the market's wrong and the Fed, and let's say the Fed comes in, starts cutting interest rates, we've got a very high chance that inflation is going to surge back again, which is going to cause all kinds of problems in corporate profit. So, there's a lot of plates spinning that everybody's expecting are going to spin perfectly for the next 12 to 24 months, much less with the election. coming up, and we all know that's going to be, chaotic. My assumption would be that's going to be chaotic between now and who we discover who the candidates are.
Oh, I agree. It's already chaotic because people are starting to ask questions that really ought to have been asked around the context of the prior election. So I'll just leave that there. But let me you brought up something really important I do want to talk about because I haven't had a chance to talk about that yet with my folks back at Peak Prosperity, which is whoops. I'm sorry, went the wrong direction there. Come on. I don't know why it decided it had to do that. Excuse me 1 second, folks. It is just so hard to get these. Sorry, I'm gonna have to stop sharing because the share thing covered up my controls. So let me so I couldn't back out of that stupid ad. So let me start all over again. Um, so this is really interesting. This was a Bloomberg article. It came out November 30th, and it's about oil's wild ride. And they're talking about disruptive band of bot traders. These are those CTAs you just mentioned.
Yes.
And so commodity trading advisors, I guess they call it, but you can see your oil has just been like getting crushed. We're under 70. So the future volatility that comes into this for me, Paul, is that I people in the oil business, this takes a lot of projects and makes them non-viable. So they
Correct.
don't, guess what? They don't get invested and we don't get future supply. People are slowly waking up to the idea that, yeah, we kind of do need fossil fuels. We kind of do need oil and gas. The whole green energy thing's falling apart, right? It's as an unreliable, expensive, not as advertised kind of a thing. But this is really interesting. Just these, they say here, CTAs have emerged as a powerful force in the oil market. Just 1/5 of managed money participants in US oil, they make up 60% of net trading volume. So they're 20% of the actual money that's at play in oil. And by the way, there's too much money at play in oil. I think it ought to be more consumers and producers doing, the legit thing, which is figuring out what price is right. Instead, we have
Agreed.
all these speculators, but they're 60% of the net trading volume is by these CTAs. And this is according to TD Bank and JP Morgan, right? You would
Mm-hmm.
be absolutely shocked how large their positions are, they say here.
Mm-hmm.
It is shocking. And so, the argument that we have to suffer through is they go, this is the keepers of the system. They say, oh, but liquidity's good. They might drive a little too far one way or the other, but on balance, having that liquidity in there is good. There is $1/3 trillion in these CTAs in the oil side
Mm-hmm.
doing what they're doing. And they don't actually care about
No.
whether we have enough or what the future looks like. What they care about is this minute, this hour, today. Is it
Mm-hmm.
going this way or that way? And they're just piling on and driving that trend. Uh, this is going to be trouble.
It will be, and they're distorting signals instead of allowing the market to have its normal equilibrium. They're pushing it beyond, that pendulum one way or another. And like you said, that's less investment that goes back into the future production for oil and energy. So that does mean that, let's say we do get the Goldilocks scenario on the other side of this, you've got supply that's not going to be able to keep up with the demand that comes through. So then that's going to be another hamper on the viability of the growth and profitability of corporations and inflationary pressures that are going to go down to the average individual.
Yep.
So, it's amazing that things have held up this well for this long. And I think it has surprised everyone. But I think there's also a lot of recession talk fatigue that investors are just like, look, hey, I'm batting down the hatches, unless I have a strategy that allows me to push a few cards on the table, pull a few cards off the table to try to navigate it in a risk managed manner, but also still participate. Recession fatigue is setting in. You've got these massive moves that are taking place in the market, and I believe that market participants are being worn down to the point that's like, okay, let's just allocate this. Maybe they're going to save the day, and that complacency is usually where things become the most dangerous or the hardest. So, this rally may carry steam into the end of the year. I think the interest rate pullback, the interest rate sell off has reached a little bit of an extreme here in the short run. I think we're going to have, at least between now and the end of the year, a little higher pressure on interest rates going up, especially with Bank of Japan coming out and starting to talk that interest rates are going to come up, which usually puts pressure on interest rates higher in the United States. So this narrative is not baked into the cake yet. Market's anticipating it, but I'm really curious to see what's going to happen after the first of the year.
Well, yeah. So again, you break it, you buy it. I'm convinced that one of the things that the Fed is broken, and you mentioned it, is this idea of complacency. People are really complacent, like to the extent people are like, and I don't think they're wrong necessarily to say, I better get in quick, because we saw these bottoms. You mentioned the bottoming process. A bottom is where you run out of sellers, and it's usually a process. And I'm old enough to remember when bottoms took some time to iron out. The bottom we had in March of 2020, when the Fed decided to flood the world with liquidity, was about an hour long,
Yeah,
right?
it was.
It was. It was a needle bottom. Things were going this way, and then they were going that way. It wasn't like this, sort things out and figure. It just, boom, went the other direction. And that was in part because of how much liquidity, money, cash, whatever you call it, that the Fed dumped in, but also because people were expecting that. And so now we're all expecting, we live in bailout nation. Like, oh, it's just going to bail out. Now, the only thing the Federal Reserve has reliably done, the one chart that I think they can claim victory on, is that every time they do that, the gap between the 0.1% and everybody else gets a whole lot wider.
Yes.
That they've just done, victory laps. The 0.1% is just made out like bandits every step of the way. And that's really all the Federal Reserve can claim credit for. And they've impoverished vast swaths, generations.
Yes.
You name it, right? Not beneficial.
The closer you are to the money printers and the power center, the better off you are. And they've decimated the middle class since the 2008 crisis. It really goes back before that with their monetary policy, but they have absolutely decimated the middle class. And
yep.
And it's frustrating, but everybody can see. And what amazes me, your audience is very well educated. You do such a great job of informing people. They're looking at the world with eyes wide open and courageous. But I've also been in this North Georgia community for the past 25 years. So you deal with the average individual that either has no desire to look at the world with courage because they want to continue the life that they have right now, or they're just not aware enough. But it's interesting to me, I'm having a lot of conversations with the average individual that's coming in and just, saying, look, I nothing I see adds up. Something has to break. Where we're going is unsustainable. So, my question is, are we reaching that tipping point now where you're educating, those that you're educating are educating, and people are really starting to wake up? They don't know what to do yet, but they're starting to recognize the problems that are out there. So I'm hoping that we're at that tipping point that we can, change. The question is, how's that change going to come about?
Well, it's by that tipping point is common knowledge, right? We have to all be able to publicly say what we privately believe to be true. So I was just interviewed yesterday by Ken McElroy and his lovely wife Danielle, and what came up in the context of that was interesting, because Danielle is both a creature of habit and a relentless receipt keeper and budgeter, right? And so the creature of habit in her always goes to, the same grocery stores, buys the same things, has a precise basket of things that she likes to eat, has worked that out years ago, and she keeps track of it. So when we were discussing the CPI, I said, well, officially food's up like, 9% over the last 2 years. And she said 52%, right? It had a number. Yep.
52. In her budget, it was 52.
Yeah, so it was just north of 50, she said. So I'm going with 52, but it was over 50, just over 50%. So is what she said. And so again, the CPI, as it's fictitiously hand buffed by the government statisticians, is not a cost of living index, which is what it's supposed to be. They do it so it's a cost of survival index, because what Danielle was supposed to have done was say, wow, these things I like to buy are too expensive. Let me buy the store brand. Let me switch out. Let me not buy Sprouts anymore. I'll buy canned peas because they're cheaper, right? So what we're actually tracking is a survival index. What does it cost to just survive, right? But if you want to eat and eat well, that's up by 50%. So people are forced to eat poorly. And that means that has a different cost because there's nothing so expensive as eating cheaply over the time, right? When you look at how, the metabolic disorders and how
Correct.
sick the United States average citizen is. So the BLS, and the BEA and all the other government statisticians, they're just busy lying to us all, and we're tired of it. And I'm excited to hear that, to whatever extent we can be excited by this stuff, that the average person is finally going, enough is enough. I'm
Yes.
tired of this. And we can openly talk about, oh, those government statisticians, they are
Mm-hmm.
liars. They are
Mm-hmm.
gaslighting liars. And they ought to be ashamed, and they should not sleep well at night because they should be ashamed of doing their jobs that poorly.
They
That's how
should
I
be.
see it.
They should be. And I thought it was interesting in your interview with Ed Dowd that he was not on Twitter over Thanksgiving, but also picked up some extra followers. And I thought that was pretty fascinating because I think there's a lot to the conversations around the Thanksgiving table, to where people they can't deny the data and what they're seeing around them. They haven't wanted to embrace the courage, but not only are they seeing it with the interventions, as you called it, but I think they're also seeing it economically and having conversations. So, I know from my wife doesn't keep a spreadsheet necessarily, but I've noticed that a lot of our brands have changed over the past 6 to 9 months, and this is a compliment to my wife, but I always tease her and say they invented copper wire by pulling a penny out of her hand. So she's actually changed grocery stores and maneuvered around, and they're all talking about it. And that's been able to reduce some of our outlay, but we try to focus very heavily on eating good, high quality food. And it's certainly impactful.
Yeah.
50%, that's the real numbers. And that, I didn't realize that, Chris, that this is a survival index. So when they're running the inflation numbers, if I understand you correctly, this has nothing to do with the cost of living to maintain your lifestyle. This is the assumption that you're going to cut back and you're going to go to basic survival, purchase the cheapest things that you can. And that's what they're basing those numbers off of. I actually did not understand that. That's absolutely horrific.
Yeah. So if they'll keep a basket of things and they'll consider it sort of equivalent. They call it the substitution basket. So if steak is up, they figure you just substitute for pork. And if pork is up, they'll assume you substitute for chicken. So their assumption is that you're always just defaulting to the lowest, the thing that went up the least, right? So that's one of their tricks, right? And that's just not how it is, right? And they will substitute crazy stuff, fresh vegetables for canned vegetables. It's just like they're not equivalent. It's just dumb. It's a game they play. So when I interviewed Ed Butowski of the Chapwood Index a while back, remember, he said that
Yes.
real inflation is at least 2, but as many as 4 or 5 times higher than officially stated, depending on where you live. Right.
Right.
So, and of course, obviously, you can't create a rate of inflation for the United States. That's the broken conceit to start this whole thing out, right? Because an elderly person on a fixed income in a non-rent controlled apartment in San Francisco who has a lot of Medicare, medical exposure is experiencing a very different phenomenon than somebody living in rural Alabama in a trailer, right? They're not having the same experience at all.
Right.
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 So that's the first thing. But obviously, as well, they undercount stuff. They don't include insurance, really. They don't include property taxes. Everybody I talked to says their property taxes were up strongly last year. Not a little, but a lot.
Substantially. A lot of the retirees that I've worked with for a long time are having to take extra distributions out of their account because of the fact that, their regular income has been they haven't had any savings in their regular income because of the increased cost of inflation. And then they've had increases in property insurance, and taxes has been the one thing that they've complained about the most from a property tax standpoint, up substantially. I don't have percentages, but based on my personal, they're up over 20% in the past 12 months.
Yeah. Mine were up 14%, I believe. So, and I live in a Prop 2.5 state. They can't raise the rate. So what they do is they have this other thing where the state has assessors. So it's not the town. Can't get mad at the town assessor, out of her hands. So the state assessors come in with their clipboards and their ties and their little government cars, and then they assess everything way up here, you know, and so the rate technically didn't move. It's just all it's like,
You
but you know, with that said, I will tell you, it's not, my town ain't rolling in it. Like we have bad finances, and so I get it. So we're all getting squeezed, and the squeezers are squeezing the squeezed, and it's just, you're wondering, when does this break? You know, what do you do? And that's a really interesting phenomenon right now. I don't have good answers for any of it, to be honest. Except
no,
stop printing money, you knuckleheads. You
no,
know,
stop printing money. That's the problem. The artificial, we're not a capitalistic society at all. We don't have capitalistic markets. It's a central planned market. And I don't think people really fully understand that yet. You know, I've worked with a lot of business owners that have built a business up from the ground. Those business owners see their employees as teammates that participate in the growth. Now, yeah, the business owner is going to participate more because their head's on the chopping block. They're one that carries the majority of the risk. They're typically the one that's working 90 hours a week. Not saying that there's not employees or members of the team, but they spread the wealth a lot greater than, you know, and I hate to say it this way, but a trust fund baby that graduates from a major Ivy League school that through their connections comes in and starts running the company. And the only thing that they know is not building that business and the team work that goes into building that business. It's bean counting and let's maximize our profitability so that I can try to buy a bigger yacht than the person next to me. Your capitalistic individual typically doesn't operate that way. And then you've got these individuals who end up in power at the central bank and others that are, hey, let's just bail everything out so we can all stay in power. And that's to the detriment of the middle class, the average investor. It herds everybody into one style of investing because, quite frankly, it takes a lot of fortitude and a lot of adaptation and letting go of your ego to be able to run a risk managed portfolio when the central bank is constantly bailing out, right? You can do it. It just takes a whole lot more work, and people get exhausted of carrying that pace, except for the few of us that are out there that continue to fight this fight because we know that it's not going to end well, and we want to make a difference in the lives of the few that are not accepting and excited about what's taking place.
yeah, very well said. Thank you for doing what you do, because and this is something I put in the original crash course back in '08, which was in the context of inflation, right? Because most people don't know this, Paul, but we had a 250-year chunk of time when we didn't have inflation in the country, like none.
Yes.
I mean, we had little blips because there were wars, and of course you print for a war, but prices would return back to baseline, meaning that if you took the money at the time, which was gold and silver, and you put it in a coffee can, if they had such things back then, and you buried it, 150 years later, you know, your great grandchildren could dig that up and have exactly the same purchasing power that you put in the ground. Now, that's what money's supposed to do, because it's supposed to have three things it does, one of which is store of value. They have specifically told us, and I hate that they never answer this question. Like Jerome Powell, we're more comfortable with 2% inflation. Why? Why not zero? Right? Why isn't zero the target? Right? Well, that's because the banking system and, you know, all their debt models like this. It has nothing to do with what's good for you or
No.
me or the country or the average person or the middle class, which is the true source of prosperity. This is what's good for the bankers. They like inflation. They got
Yeah.
reasons, and I can explain that. But for you and I, it's not a great thing. So when the Fed says we want 2% inflation, what they're saying is, you go ahead and bury your coffee can equivalent today, and we're going to steal half of that over 35 years.
Yes.
That's a tax. Half of everything you develop belongs to us. If it's 3%, well, now that's like 22 years. If it's closer to what Ed Butowski says and it's 7%, that means every 10 years, the Federal Reserve steals half of everything you work for and saved up.
Yes.
Half. It's a 50% tax over 10 years. And that forces you to have to play their game. Wander with us over to Wall Street. You have to put your money to work, because otherwise you're going to lose. You bury your coffee can. It's a guaranteed loss. No bueno. So you have to play this game. Is that a fair game?
No.
Well, no, I can show you the chart of the 0.1% and tell you that's not a fair game. So I think that's what we got to get up and out, is this idea that to be a social creature, you want fairness and reciprocity. We're going to do good things with each other. We're going to donate our time, our effort, all of that to build a better community. But it's got to be fair.
Yes. Yes. Well, and the problem with that consistent inflation from that standpoint, and another reason the middle class has been eradicated, nearly completely decimated, is because of the fact that if you make one mistake, you make one wrong step, then you get knocked back 5 or 6 years, 10 years in your financial picture. And then you're not only are you behind, but you've also lost due to inflation. So it's harder and harder to catch up, right? So, it adds pressure to the average individual because the margin of error, instead of being normal, is much thinner. So one wrong step, and then you completely changed your financial future going forward. And that's what concerns me about the Federal Reserve hurting everyone in and being, oh my gosh, the Fed's going to save the day. The only bullish argument that I can come back to, and that's what everybody talks about, central banks are going to cut, they're going to print, they're going to save us like they did in the middle of the pandemic. They're going to save us like they did in 2019. They're going to save us like they did in 2016. They're going to save us like they did when they started quantitative easing and Operation Twist, I think it was in 2013. And then go back to 2018 and, hey, they're going to save us. Well, they're not infallible. They've manipulated nearly everything that they can possibly manipulate. I'm sure they'll find more things to manipulate, but there is a point of diminishing returns. And you have individuals who have become complacent. They don't know what to do. There's fewer individuals that are managing risk managed portfolios for them to even find to try to help them navigate through the inevitable calamity when this comes apart. And then when it does come apart, nobody knows what to do. And there's very few people out there that even have the knowledge to try to help them navigate it. And you just have absolute mass pain and chaos. It goes back to first by inflation, then by deflation, they'll rob you of all your wealth. So we're in a very dangerous and precarious situation. And I think the average person is starting to see it. They can't explain it because they've not run across someone like you or your audience that can communicate this clearly with numbers in a loving, calm manner. But hopefully you're going to continue to increase that audience and meet others, and your audience will continue to refer to you so that more people can be prepared for what's coming, because pain's coming. We just don't know whether it starts 2 months from now or 24 months from now. Fiscal stimulus may do a good job of trying to keep the markets up into the election, but it gets a lot more dicey after that.
Well, thank you for that description of loving and calm. But that's only because you weren't at the coffee table with me and Edie this morning. She has to bear the brunt of me getting to a position of calm lovingness because oh my goodness, it's hard to take sometimes. But it's just because I'm a Virgo. I don't do a lot of astrology, but if you read about Virgos, we care about fairness and justice and stuff like that. It's just unfair. It's unfair. Right. But I know, Paul, in my heart of hearts, that an unfair society, an unjust society, is one that is destined to fail at some point in time. Yes. And those injustices are just getting bigger and bigger, and people feel that. And so I'd rather not go down that path if we don't have to, because I don't think we have the time or the resources as a nation to be squandering them, breaking stuff before we figure out maybe we shouldn't do that. Right. Things are getting tight, Right. So.
And the global order is changing, and I'll come back to this. I'm a Virgo too, so is that the reason why I'm so frustrated about it? We have the same curse, right?
Yeah, but,
exactly. But we forget sometimes, because there's so much attention on the central bank, that all of this globalization that we had taking place over the past 25, 30 years is starting to fracture, and we have deglobalization that's taking place now. I mean, there's a massive number of investment in manufacturing capability in the United States, which is great from a long-term standpoint, but that is also not as cost effective. It's not as cheap to produce in the United States as it is globally. So as our currency comes down and other currencies come up over time, you've got this equalization of the nations. That's tremendous inflationary pressures going forward. Plus, You've got the global order that's, you've got Bank of Japan, for example. If they leave their negative interest rate policy, that changes a lot of the investment strategy that some individuals on Wall Street have been operating under for the past 20 or 30 years. So we are leaving the old order and into the new order. And for those that are aware and are open-minded enough to consider the different paths and adaptive enough to be able to participate in it, they're going to better themselves and put themselves and their families in a position to weather the storm much better than others. And hopefully, like we've said before, be able to step into those reins of power and bring wisdom and integrity and capitalism back into the forefront of the system.
Yeah, exactly. And I was just you reminded me, I pulled up this article, but I don't have my subscription on this one, but it was a surprise article by Bloomberg just a few days ago where they said, oh, remember this whole thing where China was going to be hamstrung because they weren't going to be able to build chips?
Yes.
They just copy and that's all they can do. So we're going to hold the 3 nanometer technology or 2 or whatever it was. So the Bloomberg article was like, oh, the latest Huawei phones just shipped and they have cutting edge chips in them that they built themselves, right? So this whole idea that China needs us is, more than we need them, that they need an export market. It's like, no, what they get from us is they get dollars. That's it. That's what they get. And those dollars have utility. But this is the other big thing people need to be aware of. This is a great moment of shifting where the dollar is no longer revered. It's been revered because it was stable. It was revered because you could at least trust that the capital markets were much safer. I would much rather have my money in a New York capital market than, say, a Guatemalan. However, the United States just showed that we were willing to weaponize the dollar based on all sorts of political things, right? That was no bueno. And there were a lot of we used it as a club, more than we used it as a carrot in many cases. Okay. So these erosions happened. And then all of a sudden you get the BRICS people coming along saying, we're tired of that. Right. And so I just did an interview with Lynn Alden, who said that, probably not likely that the BRICS come up with a currency because that has certain things you have to manage, but they're doing these bilateral deals. So China and Brazil say yuan for reals, right? Let's trade. Saudi Arabia, bilateral. So we're watching this happen. And so that's ongoing really, really fast. But people in Washington, D.C. are acting as if that's never going to change. King dollar is here forever. They can be as abusive with it as they want, But the whispers are starting. And with China now developing their own cutting edge chips, I don't even know when that happened, but apparently it just happened, right?
I didn't know that either. I had heard rumors, but I didn't realize that it was already implemented.
So they're fairly sophisticated, those Chinese, they got this all worked out, so this idea that they need us, not sure about that. I don't think that's accurate.
Right. Well, when you talk about the weaponization of the US dollar, it makes me think we all know the person that we don't like, but we respect and trust, right? Like we might not like somebody's personality, but they are somebody that you can rely on to be trustworthy and that you respect them. They're going to tell you something that you don't necessarily want to hear unsolicited, and it may be true. So you respect them, but you don't necessarily like that. Until we weaponize the dollar, I think we had that relationship within the global system. So what I wrote down on my kind of daily note was when the weaponization of the US dollar against Russia, and what is it now? The new speaker is talking about seizing the assets that we have from Iran and taking those away. The pain of changing for the rest of the world now is a lot easier than the pain and risk of staying the same because of the arrogance of the US leaders and their willingness to just ignore the rule of law, which has been the one thing that caused us to be respected and trusted, not necessarily liked. And that has changed out of the arrogance of our Washington leaders. Pride comes before the fall, and I've never seen so much pride as we have in our leaders at this given time.
Yeah, no, it's a big shift ongoing. I forget who said it, but it might have been Warren Buffett, it might have been Ray Dalio, but one of the big financial types said, there comes a day when United States citizens wake up and discover they didn't hit a triple. they were born on third base,
Yeah.
you know,
Yeah.
meaning, we've had a lot of advantages and you just sort of begin to take the advantages for granted. But then when the advantages go away, that's when you sort of find out where you're really at. Um, Good news. That means we get to rebuild the country and manufacturing comes back and maybe we can get back to first principles, which is you need to have reciprocity and fairness in a culture. That the way the Federal Reserve has been operating is a distinctly, deeply unfair thing. And by the way, I don't know that you or I would have been any better in those positions because it's just humans, of which I am a member of the species, has been shown all through history. You just can't be trusted with secretive, unlimited power
Right.
because it's never a good time to have a crisis on your watch or whatever the story is.
No.
So sound money is where it's got to be at. And I don't really care. I'm agnostic. If Bitcoin could serve that purpose, I have my doubts. I got reasons, but I mean, if it was sheepskins, I
Mm-hmm.
actually think gold is got a role in all of this. So that's why I still tend to be pretty excited about gold overall.
I am
But
too. I think it has a role from a long-term standpoint. I think it's, as we've discussed before, great fire insurance against your
mhm.
portfolio, against inflation. Now, it seems like we're struggling right now. We had the highest close that took place on a monthly basis.
Yep.
I think gold's a little overstretched. I wouldn't panic buy at this point. Basically what I'm telling investors is, I've had conversations with individuals that aren't quite prepared, right? Like they don't have their allocation towards some precious metals, or they don't have any in their portfolio they need to catch up with. I wouldn't necessarily go panic buy today. If we break out of this resistance level, yes, you can get a lot more aggressive in adding. But I don't think that the powers that be are going to allow this battle to end that easily. This is a battle at high end prices, and if we get a chance to pull back, you can average into those metals if it's appropriate. Talk to a financial advisor, not a recommendation to you individually, but utilize dollar cost averaging at these levels to hopefully, if we do have a 10% pullback, that allows you to buy a few more ounces, a few more a little bit more weight of gold or silver to add to your portfolio. And I do think at some point, Chris, it's going to be appropriate. It's kind of like I was talking to someone the other day. I always carry an emergency pack in my car. If, we had a big ice storm that occurred here in North Georgia years ago, and I've always, had my kids carry an emergency pack, and it was, perfect because my daughter had to utilize hers for a short period of time during that situation. You hope you never use it. But I also think that, precious metals and on a smaller scale, that selective foreign currencies to have as a part of your emergency pack, say financially, that you set aside, are appropriate because of the power shift that occurs. And if we do end up in a currency crisis, which I do believe at some point we are, I don't know when that's going to be, but I do believe that we are at some point.
Well, it was fascinating because one of the things that also got discussed at the coffee table this morning, because I hadn't had a chance to relay it to Evie yet, was your experience in Mexico, finding out that the people on the ships and boats where you were going fishing, and the first mates and the hands and everybody, they wanted pesos, not dollars. That actually, that's the kind of anecdote that makes me really sit up and take notice.
Mm-hmm. I mean, it was fascinating because they told us that, the guides told us that coming in. So I thought, well, maybe they get charged an extra premium where they're located for exchanging currency. Well, there were currency exchange places everywhere, so that's not an issue. And the premiums weren't any worse than what the U.S. banks are. So that question was removed. But we're on these, I can't remember what the little boats are, but we go out and the bait guys come up, they're catching live bait, and they give us the number. I can't remember what pesos were, but it was, essentially going to be around 50 US dollars. So I pulled out a $50 bill thinking we get a little bit of a discount, and they look at me and shake their head, and it's going to be a 20% premium to give them US dollars. And I was like, so Kel, my son, was with me. I said, pesos, son, give them pesos. We need to save everything we can. And restaurants, they converted credit card payments into pesos. They wanted to be paid in pesos. That was shocking to me, and I'm still processing that too, because that's not the way it's been historically.
Yeah, that's one of those, you're driving down the highway. That's one of those lit signs on the side. You drive past like, wait, what did that say?
Right, right. So just a way of diversifying, you can take a
Yeah.
couple of strategic, and I'm not going to give a specific recommendation to the public out here because currencies can be very dangerous. But selectively diversify a few currencies in there in small portions, in addition to your precious metals, and you set them on the shelf, and you hopefully, hope that 10 years from now, we don't, they're the exact same price that they are today, and that all these problems have been solved. But if we do get that major impact, if the great taking is more than just laziness, that's something that is planned to take advantage of, well, you've got a few extra protections inside of there that are outside the system, and small amounts can make a big impact on your financial situation if something happens. You don't have to bet everything you have on it.
Yeah. Yeah. So you're waiting for the first of the year. I know we haven't really discussed it, but there's a big line of thinking out there that says that the US government's really been funding itself, financing itself on the short end of the curve. And to do that, they've been tapping into this giant pool of money that the Fed printed up, handed to the
Mm,
banks. The banks put it back with the Fed. That's called reverse repurchase agreements. But there's
mm,
this big line, big pile of money that everybody's starting to notice is dwindling. And you can
yes.
actually, at current rates, it kind of runs out around March of 24. So then what does the US government do? We're going to all hope, I guess, at that level that rates have come way back down all on their own, magically solving everything, which is why I'm a little suspicious that rates are coming down, because
Mhm.
it's what they want, and so um, the extent to which we have to live in this, I call it a simulacra market. It's the Truman Show, right? It's like it's not a real market, but hey, that's the game we live in, at current. But I think people do need to be kind of ready for the idea that these fictitious stories that you live into, they're good until they're not, right?
Mhm.
And when they're not, then you have to sort of say, well, where would I want to be? My solution, I know your solution is kind of similar, has been to sort of analyze it all and go, well, I'm pretty comfortable having a few pigs and some chickens and, maybe a place to throw some seeds in the ground, right? That is a solution, but I think things could get that bad. And plus, as I mentioned earlier, I'm really tired of eating bad food I like eating my own food more and more for all sorts of reasons.
Oh, I do as well. And my wife and I were talking. We went to one of our favorite seafood restaurants last Friday. And of course, the prices are up 35-40% above. Service is not as good as what it used to be, and they
Mm-hmm.
overcook. Now, we've been going there for 10 years. And we made the comment, well, on the way home, it's like it's really not worth to go for that experience. I'd rather cook at home, because then, I mean, yes, it is a sustainable, organic food restaurant, but we can cook it on our own. It's not quite worth the price and the lack of service that we're getting to go out there. So, um, yeah, I lost my train of thought there. I went down a rabbit hole and then wondered why I started going down that way. But you said something that spurred me.
Well,
So
we're
this,
talking about, creating your own food as much as possible,
yes,
right?
creating your own food. Yes. And
And
and so that's one thing I enjoy. It gives me comfort. It gets me outside. It keeps me in the dirt. You're grounded to the earth. You've got plenty of vitamin D, and I think that's something that people appreciate a lot more now. And
yeah,
it puts us in a position to be protected in the event that something does happen and we have major disruptions. Which something has to break. We just don't know how severe the disruptions are going to be on the other side.
indeed. Well, folks, if you've been wondering, could you ever possibly find a financial advisor who would be able to talk to you about the things Paul was just talking about? The answer is yes, you can. There are people out there who do get it, and you know what, everybody, we all deserve to have some people on our side who speak our own language and can talk about the things that are really happening. So, Paul, that's why we've just been thrilled to find you and help direct people your way, because we have to consider all the options and we have to talk about this stuff without limit. We can't, oh, that's unthinkable, let's not talk about gold. Oh, that's unthinkable, let's not talk about gardens. We have to consider everything now. Everything's on the table. And so
Yes.
thanks for doing what you do and helping people think through these really perilous times.
It's my honor. John Alexander enjoys it. Dylan Smith enjoys it. Our entire team enjoys it, and we look forward to it. And and the fun part is what I want to talk to a lot of the viewers out there that haven't spoken to us yet. It's not like we're having a conversation with you and immediately allocating you these areas. A lot of things that we're talking about, we're developing plans for, and we have decision points and markers. Yes, there are certain decisions that you might have to make now, but it's mapping out, being prepared, and if there's smoke in the room, which is what we look for, we want to be as close to the exit as possible so that we're 2 steps ahead of the average individual. And that's what all the planning and process goes into. So it's our honor, Chris. We've thoroughly enjoyed, John Alexander and I were talking yesterday just how much we enjoyed meeting the people that we have met through you, that you've sent our way. Just your tribe are incredible people.
Indeed, they are. So thank you so much for doing what you do. Thanks for your time today. We'll see you next week, I think.
That sounds good. I look forward to it, Chris.
All right. Until then, everybody enjoy. Hope you enjoyed this, and we'll be back with you next week with Paul.